Hello friends, a very warm welcome to my channel. In this video, we are going to discuss the business analysis of Kfin Technologies. This is a very good stock to play the capital markets theme in India. If you believe that the size of the capital markets in India will continue to grow, if you believe that the retail participation, which is still underpenetrated in India compared to the other developed economies, is set to grow from here, then this company can be a good ancillary play to this theme. If you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Here is a small disclaimer. This is not a stock recommendation. We are only discussing for case study purposes. I am a SEBI Registered Research Analyst. The stocks are chosen by the audience in the Telegram poll. I or my clients may have positions in this stock and I may change my view on the stock based on the quarterly results or any major development in the company. And this is only a crisp video, not a full-fledged one. So I'll cover only the important points in this video. This will be the flow of our discussion. We'll discuss the business model of Kfin in brief. We'll look at the charts. It's a recently listed stock. We'll discuss the financial performance. We'll discuss why the stock has corrected from the highs. We'll discuss the outlook of the management going forward. We'll talk about the valuations, the risks, and then form an overall view on the company. So Kfin Technologies is a technology-based solutions provider for the financial services sector in India. In simple words, you can consider them as somebody who manages all the operations or the back-end operations of the mutual fund industry in India. This is a Hyderabad-based company and now they are growing internationally. So they have presence in countries like Malaysia, Philippines, Bahrain. Post-IPO, the promoter stake has gone down and this has become more of a professionally managed company. In fact, their main investor itself is a PE fund. So this is kind of a duopoly market in India where CAMS and Kfin hold the majority of the market share. And this company has more than 60 plus AMCs as their clients. More than 100 plus corporates work with Kfin as their customers. 30 plus alternate investment funds take Kfin's services. And they handle data of more than 10 crore investor folios. When we specifically talk about the different services which this company renders, in simple language, they act as a registrar or transfer agent for these mutual funds or AMCs. So what do? They do handle the entire life cycle of an investor who invests in a mutual fund. From the beginning, they handle the investors' registrations, maintenance of data, transfer of securities, redemption of securities. Whatever acts we do as mutual fund investors on the back end are handled by companies like Kfin. So what is the difference between a mutual fund and an AMC? AMC, the asset management company, is the main company which manages the entire fund, handles the investments that we do, and mutual funds are different products of this industry or different schemes of this industry. So Kfin also provides technology solutions to manage all these investments that we do. And all the back-end operations of an AMC are also handled by companies like Kfin. Along with this, if a company is coming with a public issue, you can see the name Kfin in their RHP most probably on the first page itself. Then whenever somebody is coming with a rights issue or any form of a fresh funding round, companies like Kfin support the entire transaction. Whenever the company passes any board resolution, they go for voting. All the voting collection of data, calculations, everything is handled by technology solutions provided by companies like Kfin. Other than the mutual fund industry, the entire support which the PE funds require, the AIFs require, wealth management companies require, all these technology support is also provided by companies like Kfin. So there are different ways in which they get revenue. They may get some fixed income or fixed revenue streams and some variable ones like the transaction fees. For the platforms that they are giving their clients to use, they get the platform fees. For the consulting that they do for their clients, they get their consulting fees. So there are different models in which they get their revenue. This is a recently listed company, just listed 3 years before. It came with an IPO at a price of about 366 rupees and gave a decent moderate listing. From then onwards, because of the consistency in performance, we see a steady uptrend in the price up to, in fact, over and above 1500 rupees. And right now it is trading at somewhere around 1200 rupees or so. So there's a beautiful chart with not much cyclicality element till now because the markets have been good in the last 3-4 years. And the investor participation also in the form of mutual fund investments has been strong. When it comes to the financial parameters, we see a steady growth in revenue. In FY21, the company did a revenue of about 481 crores, which rose to almost 1000 plus crores in the trailing 12 months. So it is more than 2x in the last 5 years. EBITDA has also grown similarly. They did an EBITDA of about 212 crores in FY21, which increased to almost 460 crores in the trailing 12 months. It's a high margin business because it's a technology oriented service business. They are doing an EBITDA in the range of 44-45%. There was slight dip in FY23 to 41%, but then it recovered. The average asset under management of this company has also grown steadily in the last 5 years. The equity average asset management has also grown. The monthly SIPs inflows of retail investors, people like you and me, have steadily grown in the last 5 years. We used to get an inflow of less than 10,000 crores a month, and now we are getting more than 20,000 crores a month. And as the participation of people has increased, the number of folios have also grown. So you can observe that for companies like Kfin, if the number of people in the market increase, the investor participation increases, their revenue grows. If the quantum of investment that the people do increases, that also increases the revenue for this company. And as it's a technology oriented company, as the company scales, they get operating efficiencies as their costs do not increase in the same proportion, and then we see margin expansion. ROCs are also pretty strong. We see EBITDA margins of 45%, ROCs of more than 30%. Promoter holding appears low because it's a PE fund owned company. It's a cash rich company with more than 200 crores of cash on the balance sheet, which they will be using for a good acquisition in the near future. And the cash flows are also very healthy for this company. What led to a moderate kind of a correction in this company? If you observe, compared to the markets, compared to the other companies listed in the markets in the recent correction, Kfin has not fallen so much because the results continue to be strong for this company. Although because of lesser participation from the investors in the period of the recent correction, that is from October 24 until March 25, the revenue growth may not be as good as before, but still overall the stock has held strong. So whatever moderate correction we saw in the stock, what could be the possible reasons for that? The valuations at one point of time turned out to be very expensive, so that needed some consolidation. The market sentiment was weak, and there is cyclicality element in their business. If the investors' participation goes low, if the markets are weak, the overall sentiment is weak, then that can impact the revenue of this company. Before we move forward, if you're not a part of a Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day before the markets open, I share my view on the market. I share my portfolio allocation strategies, which will help you also become a better investor. What is the growth outlook of the management going forward? They want to establish themselves more from an Indian company or from an Indian market targeted company towards a global company. So they are expanding in different countries organically, and also they are in the process of acquiring a Singapore based company to expand their international presence drastically at a single go. So right now they have presence in certain countries, and now they are looking at expanding to countries like Singapore, Hong Kong, Thailand and Canada. Their international number of clients have doubled to over 70 in the last 2 years. That shows their focus on the international revenue. And they are open to acquiring other companies in the same industry of a smaller size in different countries like US, Europe, etc. Recently, the well-known PE fund, which is BlackRock, has become their client. So their aim is to become a global clearing fund administrator in the next 2 years. So the image of the company, the revenue of the company is going to completely change in the next couple of years. They will focus more on the value-added services part, and they will also register themselves as a KYC. Now we'll talk about their acquisition which they are planning to do, which will change the international business of this company drastically. So they are acquiring a company called Ascent Fund Services Pte Limited, which is a Singapore-based company. In the first instance, they'll acquire 51% stake and take the control of the company, and the remaining 49% they will acquire in 3 tranches in the next 5 years. So what does this company do? It is in the similar line of services but for international clients. It's a global fund administrator, and post acquisition, this opens up a market size of roughly $12 billion for Kfin, which is a huge number. Another advantage for acquiring this company rather than growing organically is they already get licenses and permits to operate in different geographies through this company, which is ready-made. So by listening to this, you can understand that the future of Kfin within India, as the Indian market is growing, beyond India, as the market size is huge, is bright. Now coming to the valuations part, it is trading at 65 times price to earning ratio. So the re-rating in the stock is already done. The market cap to sales is about 20x, price to book is almost 17x. So further re-rating from these kind of levels is not so possible. But as the revenue of the company continues to grow by 20-30% every year, a similar kind of a return might be expected from this company unless the market turns out to be very bad for a longer period of time, let's say 1 to 2 years. Then if the market sentiment is bad, that could impact the revenue and valuations of this company as well. What are the possible risks of investing in this kind of a business? It's a PE owned investment company. So generally the PE investors look at exits. So we see that the investors stake in the company as a promoter is going down every year. So that remains kind of an overhang for this company. The client concentration risk, as they work with limited number of mutual funds and AMCs. So if there is one big client with whom the relationship gets spoiled, that could be impactful for this business negatively. Lot of regulations like SEBI and lot of international regulatory bodies monitor this kind of companies. So that's a regulatory risk. The acquisition which the company is doing, that has to be well integrated and well executed, well scaled up, because that company which they are taking over from Singapore is some company which became profitable very recently, so their margins are not as high as Kfin. So in the short term, their margins overall as a consolidated company might be impacted, but the company is confident of turning around that company in the longer term. Technology and cybersecurity risk is always there, and the cyclicality element which we have talked about is always there in this business. So now that you've understood the business model of the company, the risks, the valuations, the growth aspects, what is our overall view on the company? If you're already an investor in this company, you should continue to hold as the growth remains strong. There is consistency in growth, the margins are high, and the cash flows are strong. And if you're looking at a fresh entry in this kind of a stock, you should decide whether you are a pure value investor or a growth investor. If you're a growth investor, then you can look at such investments in a staggered manner. And as the company continues to perform, continues to deliver good numbers from their business within India and abroad, you can make decent returns in such companies over a longer period of time. So that's about Kfin Technologies. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this name was picked up in the last video's comments. Do join our Telegram channel by clicking the link in the description button. Thank you for watching and have a wonderful day.